Recession still likely. Economic growth has accelerated since mid-2022. Americans have spent nearly all their excess pandemic-era savings, and the economy may suffer as a result. Well, excess savings have actually been pushed out 12 months from this point. One day I'm going to go crazy with what goes on in the markets with the headlines versus the data. I hope you guys are getting a great entertainment from what goes on in these markets and that you are making money from them. Let's dive into some of the biggest things that has happened since the monthly close just a few hours ago. Some of these signals haven't been signaled for over 4 years, and when they were signaled for the first time in 4 years, the extension of the bull market was phenomenal. I want to show you those in today's video. Hit the like and subscribe before I go absolutely mental with some of the crap that goes on out in the financial world. And hopefully, as I said, you are benefiting from seeing the data and actually being able to analyze it in a way that makes you some money rather than these silly subscription services like these sorts of things over here. Now, I sponsor and shill my own products because they work. We've got the Gann Swing Indicator 7-day free trial. And if you want the free TIA report, the link is also in the top of the video description. Guys, I'll kick it off with the first piece of economic data here that I said in the intro. Economic growth has accelerated since mid-2022. Remember where mid-2022 sat? Right here. That was basically the bottom. It slumped. And then the market, although it went slightly lower, this is for the NASDAQ, it's for the Dow Jones, it's for the SP500, it's for our biggest markets in the world. Although it went slightly lower, and also Bitcoin, the market basically recovered from that point. So if you were buying in that zone, now looking back 12, 18 months, it doesn't seem like such a bad option getting into the market at that point, even though it went slightly lower as well. So that's the economic growth. It's looked pretty well on track now for it has all of 2023. Now, the other piece here was household excess liquidity declining. Seth has filled us in again. Now, I remember talking about this about 6 to 12 months ago, where they were looking at the possibility of household excess liquidity was declining, and it would basically be finished in 2023. So all the free money that we got through 2020 and 2021, that was all drying up. And essentially, once that dried up, the markets had to collapse because no one had any money anymore. They couldn't pay for their rent and their mortgages, and interest rates were rising. You can see how these pictures, logically speaking, if you're looking at the media and the news and then you're talking to your mates at work, seem to make sense. But these statistics, well, the data that they present has now been extended for another 12 months. So they're saying that the money in the bank accounts, the forecast, the historic trend, household liquid holdings will now be exhausted mid-2024. I dare say that this might then get extended again, and if it doesn't, it's not the end of the world, because guess what happens towards the peak of the markets? The peak of the markets can go into debit. So if people don't have any of their excess savings, they start to go into debt. And that continues to fuel on the cycle as well. So it's not like as soon as this point hits, that's it. That calls the top and the market collapses. It's absolute nonsense. But this is a good little piece of info to keep us on track to see what's happening with the household savings, which we now know can get extended, and they'll just change their forecasts. So we're not pinning anything on here for a collapse, because at the end of the day, it's coming from JP Morgan. Did you know that after previous months that have gained more than 8%, there's been continued strong returns? That's been quite common. Basically, 12 months later, 90% of the time, the average has been 15.8%. So that means end of 2024, the average return from this point, because we've seen this trigger go off, it would say that the S&P 500 would be up on average 15.8%. But you could basically just use that and say, well, 9 out of 10 times the market has been up. 1 out of 10 times it has been down. You can see one of them here. That would probably be your worst data point going back to the tech wreck. So basically the boom, the tech boom, the dot-com boom, and then the bust there. But then you had two beautiful data points here that led you into the peak of the previous real estate cycle. So that was the peak there, 2007 for the stock market, and we know 2006 for the real estate market. So higher 27 out of 30 times, that gives you your 9 out of 10 reading. So that's a great little look at the month, or the strong months, and what happens after that point, which then builds upon everything that we've been looking at for the last 12 to 18 months, going all the way back to where this market collapsed in May and June of 2022. So the month has now ended for the US stock markets. We've got an ending for the Bitcoin market as well. The NASDAQ has been one of the strongest gainers here, now closing at its highest level in 2023 on a monthly basis. You can see the huge volume that came in October, which isn't a rollover month either. So basically the contracts roll over every quarter, so every 3 months. And so typically you would expect high volume in March, June, September, and December, because they're the high rollover months. And we got that in March, but of course we also had a pretty big scare of the banking crisis, and now the markets are up quite substantially. But October is quite significant here, having high volume but not being a rollover month. September was that rollover month. So very, very strong volume, and then that has flowed through into November. Typically over 12 months, like we've just looked at in the data, we would see these markets trend higher. That doesn't mean that it's high like that, but we could start to head out and then it just pause and try to recover or digest the move. Now you can think logically about this, or the way I like to look at it is that everyone was scared back here in October, the end of October. We were looking at the market bottoming through that period and then bouncing away from that point. I was not aware that the market would bounce away this strong, but seeing as it has bounced away quite strongly, and if we continue to get that through for December, you can just imagine the folks, the investors, the traders, the hedge fund managers, anyone else that has been sitting on the sidelines are trying to now run after their tails, which then pushes the market up higher. So this is one scenario. If that does happen and then they all start to get into the market, then you could possibly expect there to be not many gains after that point and for the market to digest this move. We know this thing has happened many, many times before. We've seen it on BTC as well, where it just shoots up. Everyone who forgot to get in at the bottom are now trying to chase their tails, and then it goes sideways. And you get everyone saying, well, I'm waiting here, it's not doing anything. They start to sell out. They get a little bit bored because they're expecting gains like what just happened. But of course, that never happens. You've got to try and get in when that fear is extreme. And October gave us that extreme fear, which has now led us to 5% away from a new all-time high for the NASDAQ here. And that is the strongest close in 2023 and the third highest close in history. The Dow Jones had an even better month. Clicking it over to the month here. We've now closed above the July top. So that was the area where the market came and gave us 3 months down. So that was the last peak of the year. So Dow Jones, highest monthly close for 2023 and roughly the second highest close in history, with only 2.3% away from a new all-time high. So you can start to see how this data is flowing over into the stock markets already. You can see that we've had some pretty strong returns here, and the months are just getting even stronger with the gap closing in on that new all-time high. SP500, it's roughly at about the fourth or so highest close in history, but the second highest close in 2023, also 5.5% away from a new all-time high price. This one's just lagging the most out of the Dow Jones and the NASDAQ. So keep an eye on that. That could just lag a little bit longer there. Nonetheless, they're still up very substantially, and I do not expect the S&P to break back below the October low based on what the chart is telling us here. Extreme volume for an October month, really, really high volume there, so that was great, and then a big push away from that point. So the next move we're looking for the S&P to give us more strength is a close back above the July top. Now, I suspect that will happen based on this next signal that hasn't come about in 4 years. So this is the first time we're seeing it in 4 years, and it really goes to show the power of understanding how to read a chart. 7-day free trial of TIA Gann swing indicator. That's your yellow line that you see here. It is a subscription. You can choose the one that best suits you to test it out. Developers work on this all the time, so whenever we need updates, that's always getting worked on. And this is a thing that we use for all of our trading, Michael and I and our members, because it helps us with our entries and our exits, our profit taking, and helping us identify that trend early on. So here we are, the 4-year signal looking at the VIX, so the volatility index now for the SP 500. I was watching and looking at the closing prices for the months here, and I looked back to see how long it had been since the volatility index, the VIX, had closed at its lowest level. So it's been 4 years since we've been at this particular price. So we can go all the way back to the November 2019 move into those new fresh highs before we got the peak and then the COVID collapse. So keep that in mind. There are many who are calling for collapses because we're at new fresh prices here. But remember, this is our bull market zone here when we get into the reading below 17, between roughly around 17 and 11 on the VIX. So the month has closed at its lowest level in 4 years. Now I wanted to look back to see when had this happened previously. So we've got one other reading here in April 2011. You can see that it closed at its lowest level in 4 years, going back to May 2007. And for you guys playing at home, you might remember that October 2007 was the peak before the global financial crisis and that massive collapse in 2008. So you've got a 4-year move here, closing at its lowest price, which means the volatility is dropping off and that you're starting to get that sustained bull market growth. When that happened, the market went on for 105 months before it got to that next substantial peak in roughly January 2020. That was our peak on the S&P 500 here. So there's your January, February top before the collapse. Going back to the VIX, that was 105, so roughly just short of 9 years that it remained in this bull market. And it was one of the biggest bull markets in history. So is that going to happen again? I'm not betting on it, being that it was one of the longest bull markets in history. So let's go back again to see if we can get another data point. So you can start to see the numbers here already. We had the collapse and the lows coming around the end of 2002. So you want to take a look back. That was the dot-com boom, the bust, the low, then the market took off again from that point. Doesn't look like much now, but you can imagine at the time that this was very, very substantial. And sure, we've got a double top, we've got a correction, and the market's gone on from that point. So we're just looking for a time in the market where the VIX had closed at a new 4-year signal, and that was October 2003. You guys might remember exactly what October 2003 was. Here it is, October 2002, then into October 2003. There's your 1 year from the cycle low itself. So that's when it happened there. It closed below the level. And then after that point, you had 4 years of a sustained bull market. There's your peak, October 2007. Hearing that month come up time and time again. So basically, there's your 4-year signal. 4 years later, you had a market cycle top. Could we get another 4 years? I mean, that would take us somewhere out to roughly November 2027. I'm not saying it's going to be 4 years. What I am saying is in each of these two occasions, and yes, it is only 2 data points, but in these 2 occasions, once we had dropped below those levels and closed at our lowest level for 4 years, we had gone on sustained bull markets. Now, you know, I've talked about that before in early 2023, when we closed back below this level after peaking in 2022, that we were going to go on a sustained bull market. Now we're starting to get a rough idea of some of that timing. I don't think it's going to be the 9 years, potentially somewhere in these next few years. You guys following the real estate cycle might have a clue about that as well. So yeah, I'm just looking forward to the next few years as this thing continues on. And don't forget, there will be some spikes, some significant spikes as well. Could be some significant spikes out of this volatility zone that could scare a lot of people, like we got back in 2015. And also, I think this was 2018 as well. Some pretty significant spikes. Yet when you look at it on the chart, it really wasn't too bad now when you go back in history and have a look at it. So that's the huge signal there. The Aussie market, 7.7% away from a new all-time high, which leads us to Bitcoin, which I guess a lot of people are here for, but we want to understand what goes on in the traditional markets to then understand if we have that risk-on environment for Bitcoin and cryptocurrencies. Well, as for now, Bitcoin is still holding out. It's got 3 days to go until we get that weekly close, and that could be another highest weekly close in 2023 for Bitcoin. But of course, 3 days to go, and this thing really hasn't moved too far after that substantial move in late October when the S&P markets had bottomed from that point. Now, in terms of the move up in this current monthly move from the low, swing move up 54%. Hope that was some good English there. 2 months up, 54%. Now we've just started December, so if we get any move up above the high of 38,426, that would set us into 3 months, just one of them, 3 months up in this move from that cycle low. When everyone was saying the market had to collapse down to 20K, we're now up 2 months, so higher highs, higher lows. This month here had lower highs, lower lows, even though it's green. So forget about that. But yeah, if December goes above the November high, we will have 3 months of higher highs. Now, if you followed yesterday's video, we were looking at time frames for weekly moves out of lows because Bitcoin had just done 7 weeks straight. So 7 weeks up, higher highs, higher lows. If we get that 3 months now, and it's not far off, you can see it's just a few $100 from hitting that high. That would put us 3 months up. So we had 3 months early on in the move. We had a little inside month, a big one, and then another one here. So basically the 3 month move, that typically doesn't happen in bear markets either. There's your bear market. There were no 3 month corrections or rallies in that bear market. The previous bear market, going back here in 2018, there was one. Happened early on in the piece, not later on in the piece. There was no new cycle low. So yes, there was one 3 month move to the upside, which really wasn't a substantial move to the upside. It just barely broke the previous month, which was basically 2 down months there after the bounce. So anyway, there's still 3 months there. We go back to the previous cycle of 2014's bear market. No 3 month rallies against the trend. You're starting to pick up what the market is telling us. These are the little signals that the market is telling us about strength as opposed to weakness. We don't have any other data points to look at when it comes to 3 month rallies in an overall bear market that then went to a new cycle low. I know many folks are really starting to see that this is the bull market and that it has begun back here in November 2022 and that there are multiple different stages of the bull market. You can get the accumulation period, then the period where you start to see a little bit of retail or a lot more retail coming in thinking, could this be the real thing? And then when the market takes off at those points, that's when everyone starts to pile in. So it seems like we're definitely in the first stage and just pulling out of that first stage into the second stage, as we've talked about multiple times before. So there's still room to move to the upside before we hit any other resistance points. And of course, the monthly swing top sitting at $48,000 as well, if this wanted to run a little bit harder than it did in the month of November. So plenty of room to move to the upside. There's still time left in the market. Unfortunately, for those who are coming in late, from the low, it now is up 140 odd percent. But that just means we're getting closer towards some sort of major altcoin season. We're going to continue to follow up with this on the channel. Make sure you do like and subscribe. 7-day free trial for the TIA Gann swing indicator. Links are in the top of the video description. Don't get sucked in by weird news headlines and recession still likely. Follow the data, follow the charts. It will keep you safe on the right sides of the market. Until next time, guys, I'll see you then. Take care and peace out.